We have absolutely been waiting for these earnings from Salesforce. That's right. Talked about it, the most anticipated. Expected some good earnings, and as you see, the stock's up 12.5%. So I'd really like to look at what these earnings look like. It was up normally right around 4%, just in a normal trading session too. To see a 12.5% move, pretty massive. This is a stock that's made definitely some moves this year, right? Nothing incredible, but still up around 30% this year prior to this after-hours movement. So kind of shocked it's not up that much higher this year, all things considered. But let's take a look at what this stock has going for in these earnings. Get your pop-ups out of here. I'm going to smack you around, buddy. Salesforce non-GAAP EPS of $1.44 beats by 77 cents. They doubled it. Just a little double action. GAAP EPS, though, of $2.85 beats by $2.86. Are you what? That seems incredible. I feel like there has to be some malarkey on there, right? Has to be some malarkey. But I don't think there is. I remember if we looked at the earnings there, they were not expected to earn EPS this year. As far as expectations were concerned, they were expected to be flat. And guess what? $2.85 is somewhat of a beautiful beat. And revenue, still a good revenue number too. Up 27.5% year over year, beats by $200 million. I did expect better numbers as far as that's concerned. Just gonna throw that one out there. I expected a little bit bigger of a beat on that aspect. I thought it would be a 30% year over year gain, but we can't win them all. We can't win them all. Still a good beat. Current remaining performance obligations of $15.2 billion versus $14.09 consensus. Big beat there, and billings of $4.63 billion versus $4.05 consensus. Good beat. They did revise guidance, and you know how they revised it? They revised it upwards. For the full year, expecting now $3.72 to $3.74 versus from $2.93 and $2.95 prior. Consensus was $2.96, so a big upwards movement as far as that's concerned. So really nice to see on that EPS standpoint, because profitability obviously was a concern for a little while on this company, but it's good to see that. Revenue of $20.7 billion to $20.8 billion versus $20 billion expected. That's against a our consensus of $20.09 billion. So a very good upward movement on that. And they beat on the trifecta, top, bottom line, and guidance. That is why this stock is up, baby. They do have slides for me too, so we're going to look at these slides, no doubt about it. Top and bottom line beats. Good to see that. So subscription and support sales were up 29%, and professional services up 23%. Pretty nice. Billings we talked about. Cash from operations totaled $430 million, which is down 2% actually. Salesforce ended the quarter with $9.28 in cash. We'll look at the balance sheet, no doubt. You know we do it all the time, baby. From their CEO, it's humbling to have had one of the best quarters in Salesforce history against the backdrop of multiple crises seriously affecting our communities around the world. That's what it sounds like. That's Mark Benioff. Look, I did not look up the pronunciation of his name. What's wrong with me? Why didn't I do it? I didn't listen to the conference call. It's my fault. I should have listened. It's all my fault. It's all my fault. The slides were sufficing, though. They're pretty good. They're pretty good slides. Q3 expecting $5.2 to $5.5 billion in revenue, a 16% increase, and they're expecting an EPS of 73 cents or 74 cents. Not that much higher than consensus, actually, so not too crazy there. Let's look at these slides with our lovely little. Well, just look at this. Whoa! Just look at this lovely little bear. They do it all the time. There's a little horse over here, a little elephant, little doggies. It's just exciting stuff. Let's look at the financials. That's what we love to look at. Come on. We love financials. Remaining performance obligations in total of $30.6 billion is up 21% year over year. Pretty nice on that aspect. Guidance, major raise on guidance, which we like to see. Obviously, revenue from a perspective on a GAAP basis, which is what I look at. 29% increase on a GAAP basis in revenue. Really nice to see that. Operating margin rose 200 basis points. Diluted EPS rose, 2,491%. That's right. Massive EPS difference here. But operating cash flow fell. So my guess is there's definitely a decrease in shares is my assumption. So I'd like to see that. But as you see, GAAP operating margin up 200 basis points. I like to see that. Number two, as far as the complete portfolio, you see the Sales Cloud saw a 13% rise. Service Cloud saw a 20% rise. Sales Performance and Other, that category, which is their largest now, saw a 66% increase. And Marketing Cloud and Commerce Cloud saw a 21% increase as well combined. So pretty nice on that aspect. Well diversified, obviously. If you go by segments, you see revenue in the Americas saw a 28% increase. Europe, Middle East, Africa saw a 36% increase year over year, and Asia Pacific and China, Australia as well. Don't forget Australia. Okay, saw a 23% increase year over year. Nice to see. And you see the remaining performance obligations. It's a nice looking chart here because you get to see the progress this company gets, and just how you're consistently seeing that number increase, which performance obligations is big, obviously, because that's the business they're doing. It's good to see that number to rise. You like seeing it rise. Operating cash flow definitely fluctuates. Quarter two does not seemingly doesn't seem to be a big quarter for them usually. Quarter two, not that massive a quarter as far as free cash flow is concerned. I don't necessarily know the reasoning. Quarter four, quarter one are their big quarters. Quarter two, just kind of a doldrums. Quarter three, even more in the doldrums. Nothing massive there. Cash balances, though, there are rising, and we'll look at that when we look at said balance sheet, as we love to do. From business overview, worldwide CRM applications, 2019 market share. Look at the market share here. 2019 market share, they had 18.4% of the market share. Oh, I'd like to see an updated chart on this, but obviously behind them, SAP, Oracle, Microsoft, Adobe. You just can't keep up with Salesforce. Salesforce is dropping it on you. You know, they're taking the pants off, and they're dropping a sack on you. That's all I can tell you. Salesforce Customer 360. Oh, it's a trusted, smart, flexible, and sustainable portfolio of everything going on here. You know, all focused on the customer. With Einstein AI, that's right, that's Albert Einstein, not the female, believe it or not. Albert Einstein was, in fact, a male, to my knowledge. Definitely so. Large and growing addressable markets, as they mention. Supposedly, expected over the next 4 years a 14% annualized growth rate because of everything, potential there as far as the segments. They think they have a $170 billion total addressable market, which again could be massive because you see the company right now bringing in on an annualized basis around a little bit less than $20 billion. So based off $20 billion annualized, maybe you could see quite the increase, right? To $176 billion. That's a lot. It's a big increase, right? And we're talking about 8 times the potential revenue than what they're putting up now. 8 times. Obviously, they talk about their accommodations, everything they win. They just win the awards, not stop. Okay, as far as environmental, social, and governance, to be honest, I don't care that much. Don't care about that much. It's the same stuff as every single company on that aspect because there are 3 things companies are focused on right now, and they're all focusing on the same things. That's all I can tell you. So everyone's statement on that is all the exact same, to be frankly honest. So not a slight I care about all that much. Sorry. So they're saying right now the headcount has grown 34% year over year. Pretty nice. Headcount's growing massive because they're attracting top talent. Top talent. That is right. This is talent that is not bottom tier. They're attracting top talent because they're paying them. So they should be good. Thank you. Here's a little Einstein. Look at him. There's a bear. There's a bear. There's a big. Look at him. Look at that bear. Just look at that bear. That's right. Let me click on this press release real quick. See where it takes me, and you know it's gonna take me right to this beauty. I think I'm hopeful that the Seeking Alpha version of this shows the balance sheet that I desire. If it doesn't, oh baby, it does. And you know what Salesforce does? They're giving me a 6 months comparison as far as their balance sheet's concerned. So we like to see that. Cash and cash equivalents. Not much has changed in the last 6 months, which is rare. A lot of these companies you've seen them hoarding cash because they want to make sure that they have cash on hand. But Salesforce doesn't seem to necessarily be doing that. It definitely is something worth noting. Total current assets of $14.8 billion versus 6 months ago they had $15.9. So you see a decrease. So I'd like to see liabilities potentially decrease from a current standpoint. Total assets in general, though, did rise, though. So you do need to mention that. Deferred tax, you saw an increase. Goodwill saw an increase. Nothing else seemingly too significant. But overall, total assets of $57.7 billion versus $55.1 billion did see a $2.5 billion increase. So, again, could be nice. Current liabilities, nothing absurd. Total liabilities in general of $19.3 billion. Versus 21.2 of, that's right, 6 months ago. So I got to be frankly honest with you. That's nice. I mean, it's good to see a rising assets and a shrinking deficit. That's what I love to see. Debt shrinks and assets rise. That is exactly what you look for in a company, and they're doing it. So I appreciate Salesforce for what they're doing, and I hope they continue to do this because, it's quality stuff. So that's Salesforce for you. As far as stock purchasing, again, market cap, and it's going to be over $200 billion now for an annualized revenue around $20 billion this year. It's debatable. Do you want to pay 10 times the multiple on that? I don't know. PE ratio coming into fruition, right? We're going to get an actual profitable year that's looking good. So you can take that as you will, but my thing on the matter is I like the company. They're good long-term stock, so I could justify a purchase if you were buying it. I'm personally not interested just due to a value standpoint, but, it's up to you. I hope you enjoyed.